And there's a difference between arrogance and confidence.
Yeah.
If you're arrogant in investing, you're going to get killed,
Yeah.
right? If you're not confident, you'll never make an investment, right? So you have to do a sufficient amount of work to be confident enough to have the conviction to do something that's contrarian.
Bill Ackman is the founder and CEO of Pershing Square Capital Management. Many experts consider the young investor to be the next Warren Buffett. Bill Ackman gained fame for his successful short of MBIA and his rescue of General Growth during the financial crisis. Like Warren Buffett, Ackman gained a great reputation for outsmarting the market. Ackman and his fund Pershing Square Capital Management have generated 17% annualized returns since the fund launched in 2004. So what long-term investors can learn from him? Let's get unlocking.
So talk to us about the Bill Ackman strategy, or that mental checklist that you go through before deciding to go long or short a position. But what's the checklist you kind of go through?
So we look for very high quality businesses, what we describe as simple, predictable, free cash flow generative, dominant businesses, a business that Warren Buffett would describe as having a moat around it, right? If you believe that the value of anything financial is the present value of the cash you can take out of it over its life, well, you need to know how much cash it's going to generate over its life. So business quality to us is the single most important criterion for determining what's interesting. Because if we can't predict the cash flows, we don't know what it's worth. If we don't know what it's worth, we can't invest. So we figure out what it's worth, figure out how good the business is, how predictable will this cash flows be from a railroad or a spirits company or a real estate company, shopping mall business. And then we say, okay, well, where's it trading? And if there's a wide gap between price and value, you can buy it for 50 cents, it's worth $1.20. Well, then we're going to take a hard look and try to understand why it trades at a deep discount. And once we understand the reasons, we decide, well, these things that we can solve. You know, or can we, in light of the situation, the circumstances, can we be influential in changing these levers that can cause this valuation discrepancy to narrow? And is this a business that, while we're causing the valuation discrepancy to narrow, we can also perhaps contribute to the valuation growing? And if those things are true, we found something that looks quite interesting for us.
Usually this investment philosophy, does it take a week, a month, 3 months to do the research, a year? I mean, you have 10 names. How long?
It depends. I mean, one of the best investments we ever made, it took us 4 hours to do the work. It was during the financial crisis.
Which was that?
Wachovia Corporation.
Okay.
So I was on my BlackBerry eating breakfast at the Brooklyn Diner in front of my building, and there was a story went across the Wall Street Journal headline, Reuters headline, excuse me, went across saying that Citigroup to acquire the Wachovia banking subsidiaries for $2 in Citigroup stock. Stock was halted. This was kind of an interesting transaction because they were buying the subsidiaries for Citigroup stock. I figured, this is interesting. What happens to the holding company? So I went back to kind of went upstairs to the office and cracked open the 10K, and another member of the team, Mick McGuire, he and I worked on it. And at the end of the day, we figured the asset, in 4 hours, we determined the holding company was worth at least $11 to $14 cash, a tax refund that you could carry back the $27 billion loss, recover cash taxes that have been paid. So you have this cash vehicle. You own Wachovia Securities, which is a good wealth management business. Mm-hmm. You own A.G. Edwards, another interesting asset. These are businesses you know well. And the stock opened after it was halted at $1.84. So we said, look, it's worth 11 to 14, $1.84. We bought 42% of the volume for the next 4 days. And then it was acquired then Wells came in and put in a topping bid of $7 in Wells Fargo stock, which wasn't actually a topping bid. But the Wells Fargo deal did not require government assistance.
Right.
So I think Sheila Bair left.
Yep, I remember that. So tell us a little about your portfolio, but give us just a take on why so few names.
So for a bunch of reasons. I mean, I've always had the view that, why not own the best 10 or 11 investments as opposed to ideas 12 through 25 or 12 through 100, which is more typical. And, I think there are very few great investments at any one time. So the ability to concentrate is an enormously valuable asset of a strategy. The problem with it is it leads to bumpier returns. And it leads to more attention on mistakes or things that aren't going well. I don't know a portfolio manager that doesn't have a stock that's down in his portfolio, right? But you don't read articles about, we're getting an awful lot of attention for a pretty high profile situation that's struggling. But I think there's it depends on what your business model is. But if you want to make high rates of return over a long period of time, it's hard to do that being very diversified. I mean, if you look through the Forbes 400, wealthiest people in the world, most of them made their fortune in one business or a portfolio of 2 businesses. Very few made it in a portfolio of 100. So it's that, and the other benefit, it allows you to run a much simpler investment firm. We have an 8-person investment team. If we had 30 names, we couldn't manage that portfolio the way we do with a small team. By having a small team, you can hire better talent.
Question, but when a stock's down roughly 25% and the stock market's gone up dramatically, at what point do you decide I'm going to buy more, or at what point do you decide I'm cutting my losses, this is just the wrong direction?
It has nothing to do with the stock price for us. It has to do with what's going on in the business. In JCPenney case, we're on the board, we're working hard along with the other directors, and you make sure that this ship is steered correctly. As a general rule, if we conclude that we're wrong or we've learned investing is about, the best investments are the ones where we are confident we're right and everyone else is wrong. Okay, and you have to, in order to be, been accused recently of being arrogant, among other things.
No, I'm going to actually ask you that. It was called, it was pompous, but that's okay.
Pompous? I don't think I'm pompous, but I've certainly been accused of being arrogant. The difference between arrogance and confidence.
Yeah.
If you're arrogant in investing, you're going to get killed, right? If you're not confident, you'll never make an investment, right? So you have to do a sufficient amount of work to be confident enough to have the conviction to do something that's contrarian, right? We bought the stock of a soon-to-be bankrupt a shopping mall company during the financial crisis at pennies per share. You have to be willing to look silly when you do something like that. General Growth stock's up 90-fold since our original investment. We had confidence. Maybe people thought it was arrogant to believe that we could be successful in turning it around. But you also have to be humble. And you have to recognize when there are new facts you hadn't considered that are inconsistent with your thesis.
So I'm pretty sure, I may be mistaken, that your entire portfolio is U.S. except for Canadian Pacific Railway, which may have been your best performer last quarter. Why is this your only non-U.S. play? And do you think actually this may be a trend where you're starting to look outside of the U.S.?
So we do very few things. In fact, we do very few things a year. Right? If our average holding period is 4 or 5 years for our kind of active investments, and we have 10 stocks, right, we need to find a couple of ideas a year. It doesn't make sense to me, unless the universe we play in, we've run out of targets. Why fly to Europe to have a meeting with management? Why deal with a jurisdiction where we're less well known, where we have fewer relationships, we don't understand the legal system, the regulatory environment? So we focus on the United States and Canada. We've invested in Canada before because we understand the language, we understand the law. It's close to home. It's a short flight to Calgary is an extra few hours, but it's just close to home. I can go see my kids.
So you like to feel and touch it?
Yeah, it's very important.
Yeah. So you're known for occasionally hiring people with some non-traditional financial backgrounds, a former fly fisherman, a tennis pro, someone you met in a taxi. So what actually are you looking for?
So most of the people that we have on the investment team are people with more conventional backgrounds. Half the team worked at Blackstone in either private equity or investment banking. A few guys from Goldman Sachs. But I'm a big believer, I had internships in my life. And if I meet a great human being, I want to give some people who didn't go to Harvard Business School and didn't work at Goldman Sachs for 4 years, some exposure. So I met, at the beginning of Pershing, I met a guy named Oliver White, who I believe is one of the, he's become recognized as one of the top fly fishing guides in the world. Very smart, interesting guy, taught me fly fishing. And I said, look, if you're interested in business and you want to intern at, learn something about it, come work for me. And Oliver came and spent 18 months with us. You're taking a very outdoorsy guy and you're putting him in Manhattan, which is kind of an interesting thing. He didn't like that part of it, but he learned a ton about business, and then he left. He actually worked a lot on one of our proxy contest situations. In the Ceridian, we had a proxy contest. One of the issues was the CEO was using the corporate jet to do a lot of fly fishing junkets, so we were able to track that stuff through his network of fly fishermen, so it was useful in the proxy contest. Anyway. And Oliver left, and I backed him to buy a fly fishing lodge, which is the Abaco Lodge in Abaco in the Bahamas. and it's like, 20% unlevered return on capital, and he's done an unbelievable job managing it. But I think it's it's a nice thing to offer people those kind of opportunities.
Well, I'm glad
I was offered opportunities like that.
I'm glad I flew down with you. Maybe I have a role for at Pershing soon.
Hey friends, do us a big favor if you are still watching, and please drop us a like. And if you want to be part of the community, go ahead and subscribe and share our content to someone you think he may benefit from watching this video. Thanks for watching, and I'll see you next week.